This recording is for informational purposes only. It does not constitute legal, financial, or investment advice.
The views expressed are those of the hosts and guests and do not represent any organization, including Bank of North Dakota. Please seek professional guidance before making financial decisions.
Welcome to 701 Chain, Fintech for financial institutions. We're your hosts. I'm Michael Lehn.
And I'm Devon Smith. Part of the format of this podcast is to educate, and we want to have really important guests on, and we want to talk to them about all things fintech. But we also felt like having a monthly update would be appropriate too. So with that being said, this is our first monthly fintech update episode for the month of April 2026. We held our spring B3 forum in Fargo. What B3 is, it's a cohort style event where we bring in interesting people to have small group events. It's a C-suite level where we try to keep the rooms to about 20 or so folks. Our speakers for the spring were from the ABA, the OCC, Fiserv, Fireblocks, and we also had Alex Johnson, who's a podcast host in the fintech world himself. Michael, what do you think of B3?
Oh, I loved it, but obviously at the end of the day, really we want our financial institutions to really come away and taking something away from it and go to their financial institutions. And if they're going to go implement some things, great. If not, and if it's just there for educational purposes, that's completely fine too, right? We just want to provide education for our financial institutions, knowing that each FI has their own strategic strategy, and we're just here to try to provide those resources.
Yeah, absolutely.
So to kind of kick us off with our first month recap, we've talked a lot about tokenization, right? It sounds like a buzzword, and stable coins across the banking industry. And we continue to hear big players getting into tokenization, stable coins, et cetera, et cetera. And this is a great example that Visa expanded its tokenized payment and stablecoin settlement pilot, pushing the idea that settlement itself is becoming programmable infrastructure. So, I know we've talked a lot about even tokenizing a loan and what efficiencies that would create in the back room, and not only on the retail side, but on the business side and agribusiness side. I think it would be huge for the banking industry.
Yeah, 100%. So from the regulatory side, FinCEN announced major AML and CFT program reform. What this is doing is it's taking the old checklist-based compliance that's used for AML and really turning into what is the result? Are we actually preventing money laundering, or are we just checking a box? One of the things that I found really interesting in this was that they are actively encouraging banks to use AI tools to provide AML solutions. So a lot of times in regulated industries, they're always hesitant to use technology, right?
Right.
But FinCEN's outright said, hey, no, use the technology, lean into it, let us know how it's working. Is it working? So it's really an interesting shift in the way that organization looks at compliance with AML.
And I'm assuming still keeping a human in the loop.
Human in the loop, yeah.
Essentially checking the checker.
Right, yep, every time.
Nice. TradFi, or traditional finance, had a big month for Bitcoin. And because Morgan Stanley was the very first bank to launch their own spot Bitcoin ETF. So a lot of these players have been getting into the Bitcoin ecosystem or gaining Bitcoin exposure through other players or other ETFs out there. So it's pretty impressive that a bank has launched their own Bitcoin ETF. And then Michael Saylor finally did it. He finally surpassed BlackRock's Bitcoin exposure. So that was pretty impressive. I love watching and keeping tabs on the strategy. So it was pretty cool.
Yeah, when you look at the macroeconomic outlook when it comes to Bitcoin, this is a conversation we were having earlier. It's so much being baked into the traditional finance world that it's starting to act a little bit more like a traditional financial product.
Yeah, absolutely. I mean, it's a digital asset, right?
Yeah.
And we see so many. I know I talked about looking at news articles day in and day out of tokenized of stuff being tokenized or big players going into stablecoins. I could say the exact same thing for Bitcoin.
Yeah.
It seems like every large institution is finding a way to some degree and taking some type of angle or some type of approach into Bitcoin.
Yeah, no. So the OCC has been really open to issuing national trust charters for fintechs. So effective April 1st, they actually amended their regulations to remove some ambiguity that allowed for these fintechs to apply for the national trust charters. That kind of falls in line with what we've seen with Circle and Ripple and Coinbase and BitGo getting issued national trust charters from the OCC. Now, Coinbase actually got theirs this month in April. In response to this, the BPI, or Bank Policy Institute, which is an institute that's backed by the big players in banking, so the JP Morgans, the Goldman Sachs, they've actually threatened to bring legal action towards the OCC because they feel like the conditions that they were made to fall under for their OCC charter is not being applied to the fintechs equally.
It's fairly shocking too to see historically, right? The OCC has only approved maybe 1 to 2 bank charters per year, and going back to 2025 to present time, they've roughly approved about 9, with about another half a dozen to a dozen OCC charters in the queue.
Yeah. No, it's been a massive shift, and I think what a lot of people are worried about is maybe a political rubber band when it comes to regulation. So try to get whatever you're doing baked in now versus taking a slow roll approach.
My last highlight is really looking at this fintech battle, and the fintech battle that I'm talking about is really looking at some of these fintechs shifting away from acquisition to locking in their client base. And someone like a SoFi, right, has now just launched what they're calling their super app. And within this app, you can do everything a traditional financial institution can do, but then you can buy crypto. They're technically partnering with Coinbase, so you can Coinbase is offering crypto as a service. And you can go buy an insurance policy out there. You can go buy equities. Everything is condensed in their one app to help retain their clients. And so far, from what I've heard, they're knocking it out of the park.
It's a real one-stop shop for everything you could want.
Absolutely.
So we've seen a kind of a global crypto regulation wave occurring. So just in April, Japan reclassified crypto as a financial product. Hong Kong is issuing their first stablecoin. South Korea is advocating for stablecoin regulation, and the U.S. Treasury has issued stringent AML rules that are applying to the Genius Act.
We should quick touch on this, very similar to the conversations that we had with Rough Rider, right?
Yeah.
Digital assets being classified as a stablecoin doesn't mean that they're Genius compliant.
Correct.
So some of these other countries actually coming out with their quote unquote stablecoin.
Right.
Not everything is comparing oranges to oranges.
No, yeah, exactly. So just because you have a stablecoin in Hong Kong or South Korea doesn't mean that that's a one-for-one to a stablecoin from the U.S. dollar. There's still going to be currency exchanges. And the rules that exist in other countries aren't written yet. So what we have to make sure that you have that liquidity behind your stablecoin, that one-to-one backing. We don't know if other countries are going to have that at this point.
Absolutely. Well, Devon, thanks. It's been a good conversation to recap the month of April. Definitely look forward to doing this again here with you. And again, for our audience, this has been our 701 Chain podcast. I'm Michael Lehn.
And I'm Devon Smith. If you enjoyed this episode, please subscribe to our channel. We look forward to bringing you education on fintech every day.